I'm going to take a quick look at the dollar today. I've been saying for several years now that we're in a bear market in the dollar. I think we're now starting to move down into the 3-year cycle low. It is probably going to be due to complete in mid to late 2021. On a daily basis, we're probably getting pretty close to the bottom of this intermediate decline. So this was the advancing phase of the intermediate cycle. It left translated to an extreme degree, and now we're in the declining phase of this intermediate cycle. And I believe we've started the bloodbath phase of this decline. That's the last 5 to 7 days, an all-out panic selling event, and it usually begins when an important support zone breaks. That was, in my opinion anyway, that was this support zone right here. When this broke, it unleashed this wave of selling and started the bloodbath phase. And then on Friday, the dollar closed below the previous intermediate cycle low, which most left translated cycles will do that. They will start stair-stepping down on an intermediate degree time frame, and so that has also been confirmed on Friday. Price closed below the March low, and this opens the door for some real panic early next week. We should have we're only 4 days into this. We should have at least 1 to 3 more days. We've got the FOMC meeting on Wednesday. If the stock market, especially if it's a little weak going into that FOMC meeting, the Fed is going to have to continue to be extremely dovish. And I think that's what the market has been anticipating all along is this very dovish Fed. They're going to just print. And so probably what's going to happen is we're going to get a bottom on the FOMC meeting. So, we've been discounting this for months now. And so while logically it would seem that the dollar would just continue to crash on an extremely dovish Fed, sentiment is already very extreme. And so probably what will happen will be that smart money will cover their short positions on the confirmation. So a buy the news type of event, sell the rumor up here, buy the news type of event, and we'll get an intermediate rally, something that'll last for 4 to 6 weeks would be my guess. All right, moving on to the weekly charts. I've said for a couple of years now that the ECB would try to keep the dollar propped up, keep the euro suppressed. They want a weak euro to the dollar. And they've been successful until now. Last week, the dollar finally broke down. You can see all of these attempts to keep the dollar propped up above the 200-week moving average, and they finally failed last week, and then now we're getting some real selling panic here this past week, and I think we've probably got another 3, maybe 4 days to go in this bloodbath phase before this is over. All right, so there really isn't much support on this chart, so I'm just looking at the Fibonacci levels. It's a pretty good bet, I think, that we're going to at least hit this 61.8 retracement early next week. And if we were to slice through that Monday morning, we might even get just an all-out panic waterfall event that could take the dollar down to this 78.6% retracement. So that is it's kind of a long shot target, but it could happen if it's going to require a big sell-off first thing Monday morning. I mean, the dollar needs to open below this 61% retracement. If that happens, then yes, we're in a waterfall event and this target becomes realistic. But the bigger picture is that we're losing this 200-week moving average. When price can no longer hold above the 200-week moving average, it's almost always a sign that a longer-term bear market has begun. And despite the dollar bulls and Martin Armstrong telling people that the dollar is going up, they've been wrong since the beginning of 2017. And now the dollar is caught in the pull of the 3-year cycle low. This is the last one. And I think we've either got one really severe move down and a final bottom, bear market bottom here in mid to late 2021, or we'll have another complete 3-year cycle after that that'll stair step even lower. I don't know at this point. I can't make a prediction on that one, but the main concern is that price is now holding below the 200-week moving average. We've still got about a year, maybe even close to a year and a half before this 3-year cycle low is due to be completed. And if we get a big sell-off down to that 78% retracement, which is somewhere right in here, then there's going to be little chance that the advancing phase of the next intermediate cycle will be able to recover this 200-week moving average. And then at that point, the bear market will be on in earnest. So for next week, I think we've got probably 3 more days in this bloodbath phase in the dollar. That's probably going to allow gold to continue to rally for 3 more days. And we might get one more big surge in silver before this is over. And then at that point, we'll have some counter trend moves. The dollar should rally for 4 to 6 weeks. The metals and probably the stock market as well should start down into corrective intermediate cycle moves that would last 4 to 6 weeks, would probably inversely correlate to the rally in the dollar. So I'm going to cover all this in depth in the gold webinar Tuesday morning. I've put in the information if you want to join the webinar, how to register for that, 7 a.m. Pacific time. The lecture part will probably last about 30 to 45 minutes, and then I'll take questions for as long as people want to ask them.